So here's a trading plan example, kind of template. Depending on your time frame, your goals, you might have 3 to 4 different rules for each strategy that you're going to trade, but it's just important to understand and recognize how to do this and then go and create your own plan. A trading plan should have certain criteria. It should have detailed out what strategies you're going to be utilizing. So I'm just calling this long FX. You're going to buy an FX trade. Well, it could be a swing, an intermediate, a long term. It could be hopefully working with the trend when you're going long and so forth. But let's talk about this a little bit more in depth. In some of our educational classes, we teach actual strategies, how to buy on a pullback, how to use our Bollinger Bands criteria, how to buy on a breakout. These are all strategies. Well, let's put one in here. We're going to call it a high base breakout is the strategy. Okay. Now, when I trade a high base breakout, it could be on a couple of different time frames. I could be using an hourly chart, which means essentially that I'm a day trader in the FX markets. Not because I'm going to sell it 15 minutes later, but on an hourly chart, I'm probably projecting to be in the trade for the next 4 or 5 hours. Sometimes it'll last 1 or 2 or 3 days, but for the most part, it's short term. Okay? What if I was using a daily chart? Well, then I'm a swing trader. What does that mean? That I'm going to be in the trade for a few days. What if I was using a long-term weekly chart? Then I'm going to plan to be in it for a few weeks, right? And you're going to signal, you're going to have different time frames. You're going to know based on that time frame how you want to trade it and what your goals and your risk and your position sizing will be. Well, what is a high base breakout? Basically, the chart pattern looks like this. It's just simply, I'll jump back a page. High base breakout is, let's say the stock is in an upward trend and then it forms a sideways base. It's simply a pattern and a strategy where you would buy on the breakout to new highs. So here's your sideways base in an uptrend, and where's your buy point? Our buy point is we want to get in if we break above resistance, right? So we have a trading plan. Now again, I'm not dictating what time frame this is. Maybe this is happening on an hourly chart. Well, if it's happening on the hourly chart, I'm now trading that time frame. So let's say that the currency does in fact come up here. I would have a game plan. In my trading plan, I know how to buy on that breakout. So I'd have what we call a buy stop order. A buy stop order is an order to buy above resistance. So I'm going to buy this currency. Maybe resistance is at 110. I put my buy order up there at 110.08. So that's where I buy in. Then I'm going to have a protective stop. Maybe my protective stop goes below this prior little swing low. Or maybe even it goes below the base or what have you. Well, that's my protection. So then I have a sell stop order. This means if the trade's not working, kick me out of it. Maybe this is down at 109.32. Okay? Now I know my risk. Once you know your risk in a trade, you can really determine a lot of factors. You know how to position this trade. You know in this case you have the difference between those two numbers is 76 pips. So that's how much you're risking. Okay, well, I know now how to kind of position this trade. I know that I'm risking 76 pips. So I know that if I buy, let's say, a full lot position, again, something we teach in our educational classes on position sizing and risk management, and we teach it in all of our videos on 7minutefx.com. Now I know how to position size. I know how much risk I have in this position if I buy a mini lot, if I buy a micro lot, if I buy a full lot position in the FX markets. And then I might have a target, and again, we teach this in our class. So here we have the basing pattern. This is the size of the base. we can project the same distance on the upside. So this is called a measured move. We're simply measuring the size of this base and projecting that the breakout will make an equal sized move on the upside. Well, maybe the size of that base was about 150 pips. So we're calling our target up here. We'll call our target price 150 pips above 110, which would put it up there at 111.50. So what's our potential reward? Well, the difference between your target and your entry price is your reward, just as the difference between your entry price and your stop loss is your potential risk. So 111.50 minus our entry price of 110.08 is 142 pips. So our reward potential is 0.0142. Notice our reward is basically twice our risk. Is that a good trade setup? Absolutely. We have a 2-to-1 reward to risk ratio. We're perfectly comfortable with the idea that sometimes this trade will not work, but sometimes it will. And if this trade were to work 40% of the time, let's say it had a 40% success rate, 4 times out of 10, you'd make a ton of money because you're making twice what you're risking. So if you are risking $100, but you could make $200, if it works 4 times at $200 a piece, you have 800 in profits. It doesn't work 6 times at 100 loss, that's 600 in losses. Every 10 trades, you'd make $200 total. I'm just throwing out a number just so you can see the math behind it. That with even just a 40% success rate, you can make a lot of money. And if you trade around a strategy like this, don't you believe that your probability of success will increase? I certainly do. So in terms of trading, a great example of how we can take something like a trading template like this, build out strategies, criteria, working with the trend. We can have goals for how much money we're going to make over periods of time. We would have risk parameters. I already talked about this, not risking too much of any of your portfolio in any single trade. We can calculate our risk, the difference between our entry and our stop. We can talk about what our entry rules are, our exiting rules, when we would remove stop losses and so forth, what our routine is. We can talk about daily, weekly, and monthly analysis that we're going to do. We can have all of these things laid out in our trading plan. Now, is this something that you can develop instantly in the next 10 minutes? Of course not. It's going to be something that you're going to develop over time. You're going to take it piece by piece. And in all of our educational classes, we teach every one of these processes. So as you come into the education, you learn more about strategy. We teach the high base breakout. We teach buying on the pullbacks. We teach the Bollinger Band. We teach you strategy. And then you're going to apply each of these principles to that. We teach you how to calculate position sizes. We teach you processes behind routines. In our educational classes, we talk about grading different currency pairs, anywhere from -3, which is the most bearish, to +3, which would be the most bullish. So a lot of this process, again, you're going to develop as you learn the FX markets.